So now it's time for your official license to shop. It's time for you to get your money all buttoned down and know exactly how much you can get. And this is where sometimes things can be a little bit confusing, and I've seen first-time home buyers kind of trip up here. So I want to make sure you get this right first time around without any issues. So there's basically kind of two types or two terminologies associated with getting your financing all buttoned up. The first one is called the pre-qualification, and the second one is called the pre-approval. Now, they may sound pretty similar, but they're actually quite different in that a pre-qualification is basically like you going online and finding some fancy online mortgage calculator and like plugging in all of your pieces of information and doing the best that you can, of course, and trying to be as accurate as possible. And then at the end, at the bottom of the website, ta-da, they spit out a number of how much you can actually qualify for. Now, this is a good thing to do when you're maybe first getting started and you're like, oh, I just want to like super ballpark it and say like, oh, can I qualify for a mortgage of $150,000 or like $450,000? If that's the purpose, then by all means, calculate away online. But I do want you to realize that some of the online calculators are not maybe as smart or savvy as you in fact might expect, because some of the online calculators, if you don't have your full 20% down, it will give you a CMHC fee, but it doesn't necessarily add that back into the mortgage. And of course it will be added back into the mortgage. And so then your monthly payment will be thrown off, and on and on and on. So, I mean, it's kind of okay to go online if you want to just see what you might pre-qualify for. But there's also some other elements that are very easy to mix up. Like some of the calculators say, oh, how much money do you make in a year? But what you make in a salary versus what you get in a year-end bonus may actually be viewed differently from a lender's perspective. Even if you've gotten a great bonus for the last few years, some lenders may say, oh, well, we don't know what's going to happen in the economy. We don't know what's going to happen with your performance. Maybe you're not going to get that bonus. And so, when you're plugging it in and you're putting in this information, I mean, just do it. It's a good start, but it may be quite inaccurate. And I just want you to make sure that you fully understand that a pre-qualification or just going into some fancy online calculator is actually not going to be enough for you to be able to confirm your financing and what you can get in terms of a mortgage. Which brings me to the next way to do it, which is called a pre-approval. And with a pre-approval, you're basically going to work with your mortgage broker, who I know you've already interviewed a few, or you know exactly what to do and how to interview them and what to ask for. And then when you've got your great mortgage broker working with you and helping you, you're actually going to start off by giving a very, very honest application, and you're going to actually start to give quite a bit of paperwork. So in this particular lesson, I've actually included a downloadable for you to be able to take. That's going to be your checklist. It's going to give you all the documents that you're going to need throughout this process, so that, if you're not just ready to get started, at least you can start compiling all of those documents and figure out, where you're going to find them. I mean, something a little bit unexpected is like a letter of employment. Is that come from your boss? Does that come from HR? How do you get that figured out? Some pay stubs, you have to log into some fancy website to be able to get them. So, the checklist is at least going to get you started in terms of thinking about how you can access all of those documents. And then once you've got all of the documents, and I'm going to say that probably the more documents you have, the better. So it's going to be everything from like proving your deposit, proving that you've got your money for your down payment, all the way through to showing that maybe some of your debts have been paid off, to your income and your pay stubs. And there's going to be quite a lot of documents that are required. Don't stress, because you've got the list that's going to help you get organized, and it's really important that you get all these documents. But the sooner you get all of the firm documents to your mortgage broker, the more concrete the pre-approval can be. Now, I have seen some instances where, the mortgage broker will accept some documents and they'll say, oh, just get us the other ones later. But really, like for me, I like to have everything kind of like all buttoned up and ready to go, so I know exactly down to the penny how much I could qualify for. And you probably want to know the same thing. You don't want to go out putting in an offer on a property and then finding that your financing is not really that strong, or you misunderstood it. So I definitely think that it's worth it up front to kind of compile all that paperwork, submit it all to your mortgage broker, have them give you a pre-approval. Now, when you've got a pre-approval, your mortgage broker has in fact gone out to one financial institution, and this does not mean that this is the financial lender that you're actually going to be using at the end, but at least, in many instances it will be, but at least it kind of locks you in. And then what happens is that once you have a pre-approval, you will be confirmed for terms of a mortgage. So everything from the interest rate, what's included in the mortgage, kind of all those great things we talked about in the last couple of lessons. And then once you have all of that, you know that you are good to go. Typically, a pre-approval is good for anywhere from 90 to 120 days. So that's 3 to 4 months. And what that means is that if you buy, so you put in a purchase offer, you put in an offer and it's accepted and you actually close on the property. So you actually have to close on the property. So you have to buy it, transfer, all that kind of good stuff, done and dusted inside of either the 90-day or 120-day, so 3 to 4 month period, then your mortgage rate is going to be confirmed. And why this is super important is because, especially over the last little while, we have seen interest rates going up. So if you are pre-approved, then all of a sudden the rates go up, you get to keep the previous rate that you had, which is really, really advantageous. Same thing typically if there's a mortgage policy change, and again, we've seen quite a few of those over the last couple of years, you'll be locked in at the terms that you were pre-approved for before that. So it's definitely worthwhile to get that done. Now, something else that's really worthwhile talking to your mortgage broker about is just letting them know that if there are additional rate hikes coming, and typically we know at least a couple days before when that's happening, and you're getting close to the end of your pre-approval window. So let's say you had, 120 days and it's 100 days in and you haven't gotten an offer that you've been accepted on, and there's a sort of an inkling and your mortgage broker can let you know that the interest rates are going up. What it would make sense to do is, if we know that the interest rates are going to be going up, and like I said, we usually have like a super small window, but we know, you could actually be pre-approved again, let's say at day 100 in this particular example, but you would be pre-approved with a different financial institution, and then your 90 or 120 days would in fact start again. So it would give you a little bit more runway. Now, you can't typically extend the one that you already have, but if the market hasn't changed, if the rates haven't changed, then it's not a big deal, and you can likely get a pre-approval again with another lender at the same or sometimes even more favorable rates. And actually, I should mention that if you get a pre-approval and the rates drop for whatever reason, typically your mortgage broker can adjust for them. So that's something that's beneficial that a mortgage broker can do. I don't know if a bank's gonna always do that for you, but typically a mortgage broker will be able to do that. So just one more advantage to be able to work with a mortgage broker. Now, one other element that I want to clarify when it comes time for pre-approval. Once you've been pre-approved, you are in fact approved for a specific loan amount, which is going to be your mortgage. But something to be very, very aware about, and we're going to talk about this in the next lesson, is that just because you have been approved doesn't mean that the property you're going to buy is going to be approved. So I'm going to talk about that more in the next lesson, but as long as you now understand the difference between pre-qualification, willy-nilly going on the internet and like popping a number out of the sky, versus giving all of the documents that you need to have a full, proper license to shop that's going to last you 90 to 120 days. That's really the way you want to go. This is such a big purchase. You do not need extra stress. You do not need things popping up out of nowhere. And so it definitely makes a lot of sense that when you are ready to buy your first home, first thing you need to do, get all your finances in order and go and speak to your mortgage broker. And you may find that your credit's not exactly where you need it to be, or you are crunching all the numbers with your mortgage broker and it does not exactly the right financial time for you because you didn't realize how expensive it would be. Well, that's why working with your mortgage broker is the very first stop on the real estate professional's road, because they're going to help you. They're going to help you fix your credit, get your finances in order, and really understand a true picture of what the implications are for you financially when you are buying your first home.